Hi, what up, YouTube? This is Vinny from the Investment Club, and today I'm going to be discussing whether Comcast stock is a good stock to buy or sell, and I'm going to briefly discuss their annual and second quarter reports.
All right, so some of the highlights for the second quarter were they had almost 24 billion in revenue. They added 217,000 customers. It was their best second quarter on record. NBC Universal launched Peacock, and as of July 30, it already had 10 million signups. So that's definitely good and something to keep an eye on.
All right, so everything looks pretty good here. They added 323,000 high-speed internet customers. Theme park revenue is down 94% year over year, and the film entertainment revenue down 18%. Now, I'm not too worried about these two things as they're largely due to the ongoing pandemic.
The cable part is a bit concerning because you'd think everyone is home, they would be using it.
But I guess you could also say everyone's bored at home, so they're cutting cable and saving money. So that's definitely one thing to keep an eye on.
Strong balance sheet. They've been paying down their debt for a couple of years now.
They raised their dividend 10%. It's also increased for 12 consecutive years. So definitely a great company for any dividend investor.
And then a few things I wanted to touch on
In their annual report. So if we look here at this map of the U.S., they're pretty well diversified, serving a multitude of states, and they also have international exposure through their Sky acquisition. Sky covers many European countries. They show the premier soccer leagues in Germany, Italy, and England, and a few other European countries. All right, so if we look here, you can see all of the cable networks that they own, and it's a very diverse list of networks that appeal to all audiences and different age groups. All right, if we look at this chart, it compares Comcast cumulative return to the S&P 500 as well as their peer groups, and they've basically mirrored the S&P 500's returns. All right, so if we take a quick look at some of their financial data, we see
revenue was up a lot year over year,
as well as their net income. And as we saw in the quarterly report, they're continuing to pay down this debt, which is down to about 89 billion. So there's definitely a lot of positives here. Now, I think the one big negative, to me at least,
is I like how they're diversified, but over 50% of their revenue comes from cable communications, and with their adjusted EBITDA is even worse, 65%. Now, obviously, we know the trend, cable cutting, people are moving away from the cable networks. So this could be a problem, but I think in the short to medium term, they will, do all right. People need internet, and I am glad to see that they make a solid amount of revenue from other things. So the licensing for these channels, they have films, film entertainment, they have the theme parks, and they also have the Sky network, which is in Europe.
They have come out with Peacock since this report. This is from 2019. So hopefully that pans out for them and it can help them, get away from that heavy reliance on cable for revenue. But as you can see, over the last couple of years, their revenue from the cable segment has been relatively stable. So that bodes well for Comcast, I think, in the short and medium term.
If we look at on Yahoo Finance here, we see their PE ratio is a little over 17. If we look at the chart, I think the company is fair valued if you compare it to its peers. I own Comcast and AT&T, so AT&T's PE is 18. I know Verizon's is lower. I believe it's around 12. Let's just double check that. Yeah, Verizon's 12.89, so 13. But I think it is a decent value. It's got solid dividend. So am I buying or selling? I think for the time being, I will hold. Also, if we go on dividend.com, we'll see. So their payout ratio is only 38%, so that's great. They have a lot of room to grow the dividend. They've consecutively increased it for 9 years. And yeah, their forward yield is a little over 2%. All good stuff. And if we look down at their revenue on the charts here, so each year their revenue has been increasing 80, 85 billion, 94 billion in 2018, and then 108 billion in 2019. Now quarterly, it looks okay. Obviously, 2020 has been tough with the pandemic, so I'm not too worried that it's down here, but I definitely want to see what happens in the medium term. So I think Comcast, it's not as exciting as Tesla or Apple,
but it's a steady company. If you are lacking exposure to telecommunications and you want to diversify more and also get a nice little dividend income, uh, in the short and medium term, it should do great. It's just a matter of what happens with cable long term. Who knows? Maybe Peacock takes off, or maybe cable sticks around. These are just things that you're going to have to keep an eye on and, continuously check in on the company. All right, let me know in the comments below what you think of Comcast, and if there's any other companies you want me to do an analysis of in the future, I'll be back with more. We'll probably do AT&T next. And if you like the content, please remember to like and subscribe. Full disclosure, I am not a financial advisor. This is not investment advice. This is for entertainment purposes only. Do your own research and consult a professional. And I am long Comcast. See you guys next time.